Hi, I'm Christian Chan, CEO at AssetMark and head of AssetMark Asset Management, our in-house investment strategist. Here we are in June, the month of dads and grads. As a dad to 3 boys myself, I wish all of my fellow dads out there a happy Father's Day later this month. As we head towards the midpoint of the year, our theme of growth and inflation slowly slowing continued to play out in May, but we're starting to see a change. The growth side of the equation looks like it's slowing down more than the inflation side of the equation. Here are 3 key takeaways. Growth looks like it's slowing down. Leading economic indicators like a company's new orders or a family's discretionary spending or the rate at which people voluntarily change jobs, those data have started to decline. And as I've noted in the past, lower credit quality companies and lower income households tend to be more sensitive to higher interest rates because they have more floating rate debt like credit card debt. And as rates have come up, those lower income households are starting to feel the weight of increased interest expense. Secondly, inflation has fallen dramatically over last year, but that decline has really flattened out over the last several months. So what's happening? First, shelter costs have been really sticky so far because it takes a long time for new housing supply to come onto the market. Healthcare costs and auto insurance, which tends to be more stable, have also started to rise. Now these may prove to be one-off increases, but one thing to keep in mind is that year-over-year inflation comparables will start to get more challenging over the second half of the year. So those year-over-year numbers will appear to be harder to hit. Lastly, lower growth and higher inflation may put the Fed in a challenging situation. If inflation stays high and growth weakens materially, the Fed may not be able to lower interest rates to support growth because lowering interest rates could also increase inflation. With all that being said, we at AssetMark Asset Management think it's important to stay invested at this point in the cycle. Growth is slowing, but we aren't yet seeing a recession. Emphasizing high-quality companies and investment strategies with focus on risk management may help you navigate this market environment. As always, please reach out to your financial advisor if you have questions or need additional information. Thanks for watching this 2-minute CIO update. We'll talk to you next month.